Hello everyone. Today is a video where I continue to share two of my trades, one of which is a losing trade, and one is a winning trade. Let's dive into my losing trade first. As usual, I use 3 time frames, 4 hour, 1 hour, and 15 minute. First, we always start with the largest time frame, which is the 4 hour time frame. The 4 hour chart is still in an uptrend. It's been trending upward for weeks. This is the key level on the 4 hour time frame. As long as the price hasn't broken through this key level, the 4 hour trend remains an uptrend. This is the 1 hour time frame. Overall, the general trend on the 1 hour chart is still an uptrend. But now the price is declining, it's pulling back. So now we need to identify the key level on the 1 hour trend. If the price breaks through this level, the trend will reverse and continue as an uptrend. Looking here, it's quite hard to identify the key level. Previously, it was here, but now it might be here. However, with this kind of pullback, it's not very convincing to me, so I'll move to a smaller time frame to observe more closely. Looking at the 15-minute time frame, we can confirm this is the key level. If the price breaks through this key level, the pullback trend will end, and the uptrend will resume. The price didn't break above but dropped below. Now what do we have? We have a double top pattern here, and the price continues to drop, supporting a continued downtrend. The key level has shifted from here to here. I've talked about key levels in a previous video, so you can understand this. Now if the price breaks through this key level, the trend will reverse, becoming an uptrend, meaning the pullback ends, and the uptrend resumes, continues. Has the price broken through the key level yet? At that moment, I concluded the price had broken through the key level. I also checked the 30-minute time frame. On the 30-minute chart, the price hadn't broken the key level. On the 1 hour chart, the price also hadn't broken the key level, but on the 15-minute chart, it showed that the price had broken through the key level. I also checked the 5-minute time frame, and it also showed the price had broken the key level. So the question is, do we trust the 30-minute and 1 hour time frames, or the 15-minute and 5-minute time frames? To enter a trade early, I also check the larger time frame, which is the 4 hour chart, the 4 hour time frame. This is the 4 hour chart. I measured Fibonacci. The pullback reached the Fibonacci levels from 0.5 to 0.618. At the same time, it also returned to a previous key level zone. So I leaned toward the possibility that the price had broken the key level, and I trusted the 15-minute time frame. Okay, now it has broken through the key level. The pullback has ended, and the uptrend resumes. Now we look for a buying opportunity. In this case, the price continues to drop. You can see the price moves up like this. During its upward move, there was no consolidation. It moved up in one go, so when the price pulls back like this, I thought it would return to this key level to retest. So I placed a buy limit order. In this case, I entered early with a stop loss of 15 pips. The target was set at the previous high. The risk to reward ratio was 11.44. Why did I take this trade? Because I wanted to enter early to optimize the high risk to reward ratio. It's been a while since I had a trade with a ratio above 10. So I decided to place a buy limit order in this case. At least I wanted a trade with a risk to reward ratio of 110. As the price continued to move up, I thought this trade would be a winner. I had a perfect entry and a perfect target. So I moved my stop loss to my entry point and decided not to move the stop loss again and to hold the trade until the price hits my take profit point, and that's it, because when we move the stop loss, sometimes the price reverses and the candlestick wick hits our stop loss, and we lose the trade. I didn't want to lose a perfect trade like this, so I decided to keep the stop loss at break even and hold the trade until it reaches my risk to reward ratio of over 10. The price continued to rise, it was looking good, and I was completely confident in this trade. But this trade hit my stop loss. This trade ended at break even though at one point this trade had a risk to reward ratio of 1 to 5.48. I still didn't profit. I ended up at break even in this case. So where did I go wrong? The price still followed the 1 hour time frame. So at this point, the price hadn't broken the key level. But when I looked at the smaller time frame, I thought it had broken, but it hadn't. It reversed and continued the downtrend, still in a pullback. Okay, so this was my losing trade. This was my break-even trade. Now let's move to my next trade. The price continued to drop. It dropped and hit the key level on the 4 hour time frame. So there's a chance the price will continue rising from here. Looking at the 15-minute time frame, this uptrend could be an uptrend from the 4 hour chart turning into a long-term uptrend, or it could also just be a pullback of the previous downtrend before it. Only when the price breaks through this key level can we confirm that the long-term uptrend of the 4 hour chart has resumed. But for now, we still consider this uptrend as just a pullback. This is the key level of this uptrend. the price returned to the key level, and a candlestick pattern appeared. A reversal pattern in this case. But the reversal candlestick pattern here, an engulfing pattern in this case, wasn't convincing enough for me. Because this green candle has a tiny body compared to the red candles before it. So I thought, the bounce in this case wasn't strong enough. But I still believed this uptrend, this pullback, had to continue rising because the price hadn't reached the Fibonacci zone from 0.5 to 0.618. It also hadn't reached any key level. So I believed the pullback would continue rising. It would keep rising, but this reversal candlestick pattern didn't convince me. When trading in a pullback, it has to be very clear before entering a trade. If it's not clear, it's best not to trade in a pullback, because the pullback might just drop further. So I passed on this opportunity. Okay, I can confirm the pullback continues to rise. And when the price pulls back like this, if you look here, you can't see it. But on the 5-minute time frame, you can see. This is the key level of the uptrend on the 15-minute time frame. It hesitated very well. The price bounced strongly like this. I decided to enter a buy order immediately. In this case, stop loss below here. Target above. If the price pulls back, it could return to one of these two places. This key level, or this key level. Because we are trading in a pullback, we should be as safe as possible. We target up here. Set a risk to reward ratio of 1 to 3. And this trade hit my take profit. Some of you asked me to share a losing trade, so we can learn from it together. Honestly, I haven't had a losing trade in 3 weeks. That doesn't mean I'm a pro. It's because I'm following my challenge, which is for 1 month. I only allow myself a maximum of 2 trades per week, so even though I have a lot of time, I have to restrain myself, and only trade when the opportunity is really good. Even though I haven't lost any trades, I also haven't won. With a 100% target hit rate for 100% of trades, I set a risk to reward ratio of 1 to 2, 80% hit 1 to 3, and for 1 to 4 or 1 to 5, only about 40%. The winning trades that hit the target are only about 50 to 60%. The rest are break-even or small profits not worth mentioning. There are 2 main reasons for not hitting the target. One is I misjudged and had overly high expectations. The price reversed before reaching the target. Like trades like this. 2 is the price pulled back, hit the break-even point, then went up to hit my target. So I'm still trying to improve how to choose take profit points and move stop losses more intelligently. Not just moving the stop loss once the trade hits a 1-to-1 risk to reward ratio. But from this, you can see, if you force yourself to take fewer trades, you'll naturally filter for better trades. Too much noise, you skip, and that increases your win rate. You can try my approach and see if it improves your win rate. For now, goodbye and see you all in the next videos.